Hi guys, welcome to another video. And in this video, I'm going to talk about equity release, which is the method that the rich and wealthy people use to buy one property. And then once the capital appreciation of that property is done, they can buy the second property, third property, fourth property, and all of them will be under the same ownership. So it's basically how you use your money and your recurring income to buy multiple properties without selling the first one. So let's get right into the video. My name is Sidharth. I currently work as the Associate Director of Sales at Home Life, and I have around 4 years of experience in this industry. And I am licensed by Dubai Land Department and Real Estate Regulatory Agency. And talking about my company, we are one of the biggest brokerages here in Dubai. So if you're new to this term, I'll tell you what exactly is equity. So basically, it's the portion of the property that you actually own and the gap between its market value and what you still owe to the bank. I'll give you an example. So now you buy a property of 2 million dirhams and you paid 400,000 down payment, and the rest 1.6 million dirhams is financed. I'm not talking about the fees here. Let's keep that aside for easy calculation. So your equity is 400,000 because you paid around 400,000 dirhams right now to buy this property. This is what you put down as liquid money, right? So now what you need to do is that you will keep on paying monthly installments towards the mortgage and your equity keeps on increasing. Let's say after 3 years, your property value is 2.5 million dirhams. So basically your capital appreciation is 500,000. So this is added equity for you, even though you didn't pay for it. And let's say you paid another 200,000 of mortgage during that 3 years. So basically you paid 400,000 down payment, 200,000 mortgage, that is around 600,000 in total, plus your capital appreciation of 500,000, that becomes 1.1 million. So basically your equity becomes 1.1 million after 3 years if you keep on paying in this method. So that is basically what equity is. Now, before understanding what is equity release, I'll tell you an example with the same numbers that we gave before, right? So if you want to get that 1.1 million, that includes your 500,000 capital appreciation premium plus the 600,000 that you already paid towards a property. If you want to get that, if you are a first time investor, what will you do? You'll just sell your property. But instead of selling your property, you can just borrow the money against that property from the bank. So basically, you will keep your property, so you will get your rental income and you get some extra cash as well as part of the equity release. So you are not selling a property, you still have the full ownership. You can hold it long term. You will get all the capital appreciation that comes in the future. Your tenant keeps on paying your rent, so your rental income won't be messed up. And still, you get some extra cash that you can use to buy your next property. You can use it for anything. You can buy a car. You can use that money to pay off your next loan. And the property ownership is still yours, so you don't lose anything here. Now let's do another example. Okay, this will be a realistic scenario. You can just take a paper and you try to write it down and calculate yourself, because I think it will be a little bit complicated, especially if you don't know how this works. So let's say you buy a property for 1.1 million in 2022, and today it's worth around 2 million, and your outstanding mortgage will be 900,000. So your capital appreciation will be 500,000 and your total equity will be 1.1 million. Now let's say for this 2 million dirhams, if the bank is lending you up to 75% of that value, which is 1.5 million, right? Because 75% of 2 million is 1.5 million. So if the bank is lending you that amount and your outstanding mortgage amount was just 900,000, so when you reduce this 1.5 million minus 900,000, that gives you around 600,000 free cash. So this 600,000 will be released from the bank from this property of 1.5 million that you bought, which is worth 2 million now. Without selling it, you got 600,000 extra cash. If you have any doubts on this, you can just always ask to me on the comments. I hope this is very clear for you. And talking about why the experienced investors always do this, because they are not selling their property, right? So your property keeps on rising in value. So now it was at around 1.5 million, now it's 2 million, it get to 2.5 or even 3 million in the future. So since you didn't sell it, you are not losing on any of those capital appreciation benefits. And also your rental income continues. So even if your mortgage increases and your monthly EMI increases, still your tenant will keep paying you the rent, right? So your mortgage percentage, or maybe 100% of the mortgage, or maybe at least a big chunk of your mortgage installments will be paid by your tenant still. This means you can also buy multiple properties. So instead of buying one property in 5 years, you can buy one property every year or 2 years. So this will help you to expand your portfolio and make sure in this case you are investing in different locations and different developers, and maybe one stable developer but different locations, so that you don't put all your eggs in the same basket. Or, if the Dubai prices keeps rising, you will benefit from across multiple assets. Every asset that you have will keep on growing, and this will literally multiply your money within like a few years. And basically, this is free money, right? That 600,000 that you got, it's not specifically that is allocated to the next property. It's just free money. You can renovate your existing property. You can use it for your business. You can use it for your education or your kids' education. You can use it to pay off your loans. You can use it as an emergency fund. You can do whatever with it. It's just free money. It's like taking a gold loan, right? You put your existing gold on the table and then you take a loan off over it. So it's the same thing. Now, talking about the risk that you should understand when you are doing this, this will increase your mortgage, it will increase your monthly payments. But like I said, since you own the property, your tenant will keep on paying you rent, and that will cover up your mortgage and your monthly installments. But another risk you should keep in mind is that if the interest rates are going up, your cost will also go up. So it depends on the Feds. If they increase the interest rate, then this will be a riskier choice. But it's not going to make this a bad choice at all. It's just something that you should keep in mind and keep a buffer of. And obviously, if the property prices fall, your equity will shrink. So if for that 1.5 million property, it becomes, let's say, 1 million, your equity shrinks automatically. So that is why you definitely need a good consultant who will help you to structure your investment in such a way that you put your money in less risky projects and less risky locations and very well reputed developers. And yes, if the rental income doesn't cover your expenses, the difference should be paid by you. That's another thing. You need to pay extra from your pocket. But if you are buying a property that has around 7%, 8% ROI, this is not a risk for you. So it depends on how you structure it, and you definitely need a consultant for this. And especially if you are a person who has very less risk tolerance and you can't sleep properly after doing something like this, better not to do it. I'll give you my number. You can just call me, text me, or WhatsApp me, and I'll structure your particular investment strategy in such a way that your cash flow is tailored to your needs, and it will be in such a way that your tenant will cover off your installments, and you will have to put less money from your pocket every month. Definitely give me a call if you are planning to invest in something now or even in the future. I'll give you a free consultation. So that's it. I'll keep on putting some good videos like this. So if you have any particular topic I need to consider or cover, just tell me. I'll do a video like this. And if you feel like this is a good content that I'm putting out, you can just like the video and subscribe to my channel. I will put always information and good content. I'm not going to put hyped up projects only. I'm going to put very well curated products that are strong in the market and has strong fundamentals. So just feel free to give me a call or WhatsApp. Thank you.